But do you pay it on the computer? You have to.
What if it gets lost in the mail?
No, I just write a check.
You write a physical check?
I write a physical check.
Man, you might be older than Gary.
I'm ready to get up and do this table right now.
My Lord.
Hello, everybody, and welcome to Cumberland Unfiltered. I'm Gary, and I'm joined today by my co-hosts, Brad and Jason. We haven't been on the air for a little while, and just thought that maybe you guys would want to chat a little bit about what that was.
Took a little vacation.
Little unplanned hiatus. We reconfirmed our mission statement and, synced it up with, the people that are involved. And we got to the point where we thought we needed some professional production. So we went out and found some professional production. And hopefully you guys will see not you guys, but everyone listening or watching will see the results of that.
It's good to be back, I'll tell you that.
Yeah, but we missed you guys as much as you missed us, right?
Yeah, exactly, 100%.
Yeah, we would come into the studio and just kind of hang out and drink. we called it meetings.
We had a lot of meetings.
Just no audience?
Nobody listening there.
So we are joined tonight by Ewelina Leja, who will shed some light on financial literacy for young people. Ewelina is a financial professional with 15 years plus of experience in consumer banking and credit. She serves as Senior Vice President and Product Manager for a major U.S. bank. She earned her Bachelor of Finance from URI and recently completed her MBA at Bryant University. She was born and raised in Poland and moved to the United States at age 16. She worked her way up the ladder from teller to senior leadership, which has given her firsthand insight to how a strong foundation in financial literacy can provide a path to success. Welcome, Ewelina, to the show. We're glad to have you. We've been looking forward to this for a long time.
Yeah.
So this is awesome. So we have a pretty extensive agenda that you kind of worked up for us, and I just kind of going to throw the ball your way and say rock and roll.
Yeah, no, first of all, thank you for having me. A lot of pressure being the first one since you guys took your little hiatus. So hopefully it's a good enough episode.
Yeah, don't mess it up.
This episode shouldn't make anybody mad.
Well, hopefully it's not controversial. We'll see. We'll go from there. But I want to get us started today with a stat that I think is kind of important to call out. 1/3 of U.S. teens don't know the difference between a credit card or debit card. So looking at some adults around the table, I think adults.
I don't even know what a check is.
I'm going to ask you guys, do you know the difference? Like, what is the difference? What is a credit card?
Gary's been an adult 3 times over.
Oh. I know a debit card money comes directly out of your bank account versus a credit card, which basically you're taking a credit against whatever bank that you're, paying for stuff.
Yeah, it's pretty good. I'll take it. Anything to add?
So the credit card companies have to entice you, so they give you rewards. I think a lot of the times.
Right.
I know points and stuff. And, the debit card, the banks, they just give you a debit card, and there's really no benefit to that, to using a debit card.
The one thing that I've never had a debit card because debit cards aren't protected the way credit cards are with the issuer. Is that right?
That's actually a question, because I never use my debit card. Besides the ATM, that's it. I won't use it for anything else because I feel like my bank account information is out there versus a credit card that doesn't come directly out of my account.
Yeah, so to Jason's point, when it comes to rewards, it's definitely a benefit of credit cards, right? Especially if you apply for a rewards one. There are cards that don't get rewards out there, and there's a reason to have one of those. They typically come with a lower interest rate, and we'll talk about those in a little bit. But from debit perspective, right, I think the benefit is you're not borrowing, right? Some people who maybe don't have a great credit score, and we'll talk about that a little bit more later, they might not be able to get a credit card, for example. So your debit card might be your only vehicle for making purchases, especially in this day and age where, cash is not necessarily the primary way of paying for things, right? But as it relates to credit, really what it is, it's borrowing money from a lender, right? So I think you nailed it. You kind of added along to that. You're borrowing money. You are going to have to pay it back, right? You can pay it back either in full at the end of your statement cycle, or you can pay it over time. And if you're paying it over time, there's typically a cost to it. So that's really the major difference. From debit perspective, you're not borrowing. The money comes out of your account. When you're using a credit card, you are borrowing. It's someone else's money that's being used and you have to pay it back. So that's the big difference. One of the other things is, there's many different ways of using your credit cards. I think you guys can name the main ones, right?
Gas.
Right. So purchases, right?
Groceries.
Purchases at point of sale, you're in person, you're swiping your card, you're tapping it, maybe you're inserting a chip, right? There's many ways to do that. That's one.
If I had to guess, that Gary was going to yell out gas. No. I mean, we all knew it was happening, but you didn't have to yell it out, Gary. Anyway.
Knee-jerk reaction. I can't take it. Based on my inner.
Okay. All good. So what's another way?
Purchases, are we saying?
In person, right? Point of sale purchases. You're in person, you're using your physical card. How else could you use your credit card?
Online.
Yeah, online. That's a big one. Third, but that's really a hybrid of the first two, in my opinion. It's digital wallets. So using your Apple Pay, Google Pay, PayPal, Cash App these days. There's so many different other vehicles, but really using something digital. So you're tapping your phone typically in those scenarios. So that's your third. But there's a couple other things that some people might not be aware of. So you can do a cash advance. Cash advance is when you take your card, your credit card, think of it this way. You go either to a ATM or you go into a bank in person and you take out cash. So it's like taking money out of an ATM, but you're borrowing it and you're starting to pay interest on it immediately. So that's another one. The fifth now, balance transfer. Right? That's the next one. So you have a balance on one credit card. You want to move it to another credit card because that credit card company is offering you a lower rate. So you're moving balances to another card from first to the second. And then last but not least is a direct deposit or convenience check in some cases where the credit card company provides you with an opportunity to put cash into your bank account or write a check to put into your bank account or pay someone to take money out. And they all have different interest rates in most cases. So that's something important to also
I
know.
got a quick question for you on the balance transfer.
Yeah.
Typically, you get 30 days to pay your credit card off, right? So if I was to wait for day 29, transfer my balance to a new credit card with a lower rate, does that defer the payment for another 30 days?
Yes, it does. But there is a caveat to it. When you do a balance transfer, there is a fee that you have to pay. In most cases, it's 2 to 4% that you're going to pay to make that transfer, or it's a flat fee if the amount is below a certain amount. So you got to pay attention to the terms and conditions, but there is a fee, so it's not free.
Wait, the terms and conditions that are like this that nobody ever reads, just clicks I accept?
Right?
Those are the ones. Those are the very ones.
So does a balance transfer, because I used to do this when I was a kid. I went a long stretch without using credit cards at all. But when I was in college and, when I first joined the Army, I was doing balance transfers all the time. Every time I got one in the mail. Does that hurt your credit to do a balance transfer? No?
It does not, as long as you pay it on time. And we'll talk about the important factors that go into maintaining good credit score. But paying on time is one of the big ones. It doesn't hurt you. Moving money out of one to the other doesn't hurt you, as long as you're following the terms and conditions.
So you mentioned a cash advance, the interest starts immediately.
It does.
So if you pay, and I know the answer, but if you pay your balance of your credit card, you have 30 days and you pay no interest on that, correct?
So it's a little more nuanced than that. The 30 days is not incorrect, but what you need to understand is that you have a statement closing date on your credit card.
I didn't know the answer to that. Okay, what?
You're pretty close.
Yeah.
So your statement closes, let's say, on the 15th day of every month, right? That's your statement closing date.
For the previous month, right?
Correct. For the previous month, the
Right.
previous 30 days, usually sometimes less, right? Depending on how long the month is. The bank is required to give you 21 days by law to make a payment. So technically it's longer than 30 days because if you make that purchase on the 16th of your statement cycle and the cycle doesn't close until the 15th, you're going to have another 21 days after that to pay off your credit card. So you don't need to do the mental math, the days and all of that. The most important thing is to remember if you're making purchases by swiping your card or using a digital wallet or making online purchases, you have until your payment due date to pay that off in full, and you don't have to pay interest on it. If you leave some balance after the fact, so you only, let's say, pay off half of it, and you leave the remainder for the next time, you then have to pay interest. So let's talk about the interest. Like, there's an APR, right? So on average, and this is a fourth quarter of 2025 stat, the APR on the credit card for U.S. consumer was 20.97%.
Try to avoid that one.
Yeah. Let that sink in, right?
Yeah.
20.97. Let's walk through an example. I'm going to quiz you guys. Let's see how your math skills are, right? Imagine there's a $2,000 balance on the credit card. The APR, annual percentage rate, and that's the annual rate that someone will pay on their credit card, is 20.97, which we just talked about, right? The average. I'm not going super high. I'm not going super low. We're going average for a U.S. consumer.
Average.
And the minimum payment is $25.
Oh, jeez.
So imagine you're paying just the minimum payment.
It's like an extra $400.
How long do you think it will take you to pay that off if you don't use the
Just the
card?
minimum payment?
Just the minimum payment until that balance
20
is
years.
gone.
But it's
I'm
an
taking you
APR.
that.
20 years.
Highest without going over. Okay, you said 20 years.
Crazy. You're crazy.
Paying the minimum only on that money.
25 a month.
25.
That's accruing 20% interest
So
by itself.
25
But that's annual, right? Sorry.
Yep.
200. I mean, it's 25 a month. It's 250 a year.
A year.
So, but then that's annual. So then you're down 250, and then you have 20% again. Shit, I don't know.
It's
20 years.
It's compounding.
Well, I think 20 years is high, but I don't think it's astronomical.
It's too far off, yeah.
Like 7 years, 6 years.
7 years, okay.
I'm going to say like 12 years.
Okay, you're all over. But that's not a
really?
bad thing. You're overestimating how long it's going to take. It's actually going to take 5 years.
And that's it. That's if you don't
$2
use.
grand.
If you just put $2,000 on and don't use the card
Don't
at
use
all, ever, just pay it.
Yeah, right.
And just pay the minimum payment. Nothing more, nothing less, just the minimum payment. So you're not missing your payment. You're paying on time. It's going to take
Building credit though.
you
right.
you are building credit. That's correct. It's going to take 59 payments to pay that off, which is just about 5 years. Yeah.
That's crazy.
Total interest paid. Do you guys want to take a guess, or you want me to give you the answer?
Against
Don't ask Jim. Let's say 100,000 of what does it on it. You know what I'm saying?
$2,000. How much interest are you going to pay on that?
This isn't 2026 me, Gary.
400 times
$4,000, Gary.
Guys,
Two-
you
two
are really
grand.
bad at math. God, I'm glad I'm
2
here
grand.
today.
It's like $2 grand.
No. Say $1,500.
Closest. Still over. Nobody wins again. It's
We suck at this game.
yeah. But you know what? You're being conservative. It makes you good, probably, at maintaining a good credit score, I assume.
That's fine.
I bet everybody at this table pays their credit card off 100% every month.
Yes.
Yes.
Yeah.
So that you don't have to know that other stuff.
If you're paying in full, you're good.
But everybody can't.
That wasn't the
doesn't
case.
have-
That wasn't the case my entire life. You know, but when I was younger, I did not, and that's what this podcast is for the younger kids.
Yeah.
Or he's
Them early.
carrying a balance is not, which
Nothing's free, right?
Which is why
Nothing's free.
Nothing's free.
This is why we roll it up. Cash was king. It's like you didn't buy it if you didn't have it. That was the advantage of having cash.
Yeah.
Without a credit card.
Yeah, so to give you guys the answer, the total interest is actually $1,206.
Close. Hit it on the money.
Yeah, he was pretty
So,
close.
It's close.
So a total paid will be $3,206 on $2,000 we borrowed, and it's going to take you
50%
5
more.
years.
Yeah.
And that's if you pay it on time every time.
Half the balance goes to friggin' interest, which is basically flushing money.
You're not
out. So
buy anything else on that credit
No.
card during that period of time either.
take $1,000
Anyway.
and flush it.
So I think to kind of wrap this all up nicely, I would say there's some do's and don'ts of credit cards, right? So make sure you keep your balance manageable. You don't want to have a crazy balance that you can't afford to pay off. Try and pay off as much as possible, preferably in full if you're able to. You want to check your account, right? You want to make sure you're not getting charges that don't belong to you. I think sometimes, since it's not your money technically, you're borrowing it, people tend to not pay as much attention, and fraud happens, right? So you got to be careful with that.
I just got fished.
So you got to be careful with that stuff.
Yep.
Yeah.
So it says AAA. I'm a AAA member, and every time they send me a, you want to do this, you want to do that, they use the same AAA Northeast, right? Is there when you get your emails, I've listed them out as AAA Northeast. So I looked at them, and they were offering a free kit for a car you kept in the back, like with jumper cables and all that other business. I'm going like, oh, AAA, I'm a member. This is good, right? But then I didn't check the actual entire length of the suffix on the credit card, on the name of the AAA. And then it was a guy fishing me. And fortunately, my bank was really reasonable about it. But then within minutes, I got a phone call from somebody in Minnesota saying they were trying to charge like $6,000 in my credit card.
Wait, you say fraud in Minnesota?
They just happened to be Minnesota where they did it, where all of a sudden and I said, no, that's not me. And then I went like, what did I do? How did that happen? I mean, within minutes it happened. And it was for $8.61 is what I actually charged with AAA. I don't know, shipping and handling. So you have to be on your toes.
There's no shortage of fraud these days. So
Is phishing the biggest one, you think? Or is it not necessarily?
I am not a fraud expert, so I can't necessarily speak to that. But I'll tell you, ever since COVID-19, the fraud has really ramped up. They are able to secure some funding and go after consumers more than ever. And banks work really, really hard to try and protect clients because obviously the bank's money's on the line too. It's not just the consumer's money. We're on the hook if we don't catch it as a financial institution. So yeah, there's a lot of it. So you got to be careful.
Oh,
And they're getting creative.
That's what this AI thing scares me a little bit about. It's like
We haven't even seen that.
we
That's
haven't
gonna
even
be
seen
it.
the apex of that.
Oh,
It's
yeah,
like
that-
talking about fraud. I mean,
But they also use it to catch fraud too. So
Right. I think it's a race of who's going to do it better and
Right.
who's going to catch up to it sooner. Yeah. There's definitely more to come on that front. It is a very quickly developing area.
Is the fraud department a big department in banks that have a lot of credit cards out there? I mean, is it like, because every time I call them, I get a hold of a bunch of people. I mean, everybody's always there trying
it's
to.
the only time I call and talk to
What
somebody.
happened? Okay, Joe over here, he'll get you straight, right? And then then you get straight pretty quick. So I bet you there's a lot of people that the banks have to pay because people are cheating all over the joint. So
Yeah, I think there's definitely a lot of employees that are in that area, but I think a lot of banks are investing in technology.
into
In
technology.
technology, right?
Yeah.
To your point, they caught it. They notified you in some
Yeah,
fashion.
they did.
Right. They have a lot of blocks that are built in, a lot of technology that goes into detecting where this particular activity is not an activity that's typical for this client. And they'll flag it and they'll try and get in touch with the consumer in order to verify, like, was this really you? Or was this someone
Yeah.
else?
You get those text messages or an email. You just try and swipe, blah, 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 blah,
Right.
because it must popped up some shady transaction.
It's frustrating if you're trying to buy something. I
is.
was trying to purchase something for a trip to Iceland and I kept getting blocked and I was like, come on.
Yeah.
Come on, I worked for this page. Can you let me just buy my thing?
You don't know if it actually went through or not.
Yeah. No, I knew it didn't go through. Trust me, I knew it didn't go through, and I knew exactly why it didn't go through. But I needed to get in touch with someone to get it fixed. It's a whole thing, but it's for the right reason, which is the important part. So, I think that's it from me on credit cards. If you guys want to move on to maybe like credit scores and credit
That's a good one.
reports.
Credit scores.
Yeah. So, who knows the difference between a credit report and a credit score? I'm gonna put you guys on the spot again.
It's actually your call. I don't know. I mean, a credit score, I see occasionally, I think it pops up in my credit card statement if I go online or whatever. But a credit report, I don't know if I've actually ever
credit
run that.
score is what institutions use to figure out whether you're a good risk or a bad risk, and they
Yeah.
cater your interest rate to that.
Oh, whether
Credit report shows you why that is, maybe.
Yeah, that's pretty much it, right? So credit report is what feeds the credit score, right? So credit report is all the stuff that happens. And then your credit score is a 3-digit number that essentially gives you a grade on your riskiness. So the bank can then assess whether or not they want to extend credit to you, whether it's a credit card, auto loan, mortgage, personal loan, or anything else, right, that you're trying to borrow against.
Isn't it true that the higher your credit score, you may pay less interest on something that you're buying from, say, a furniture store or someplace where you're spending a fair amount of money? So it's really to your advantage to try to carry a higher score, isn't it?
Yeah, a better credit score will give you a lower interest rate most of the time, right? So you want to have as high of a credit score as you possibly can, and we'll talk about what goes into the credit score and what are some of the numbers and what do they mean. But yeah, you're correct on that.
Okay.
Yeah.
So I went buy a truck a few years ago, and I was going to finance it. I said, hey, why burn a bunch of cash on a truck? And I said, I have excellent credit, because I have no debt, nothing, but I hadn't used a credit card in over 20 years,
So you had no credit.
I had no credit history.
That's a
I had like good credit, but not excellent. And the guy, it was in Massachusetts. I don't know if Rhode Island does this, but they had to show me if I paid the payment every month like I was supposed to, how much interest I was going to pay on that truck. And I'm like, no way. So I went and got the cash anyway and got fear sick. But I mean, I just was like, I didn't get the lowest interest rate because I had a lack of history.
So they
And then-
lag you.
But then I pulled my credit report and there was nothing on it. No faults or no
Yeah, it's just nothing.
because I had nothing. And I said, well, how could it be so low if I have no? And they were like, because there's no history. You have a mortgage payment and that's it.
So you ain't worth the gamble.
Yeah, I guess.
So I think this may be a good time to talk about what goes into your credit score, because what you just said is a perfect example of someone not understanding what are the key factors that are impacting your credit score. So let's start with that, and we'll come back to the credit report and all that fun stuff that goes into that. So the first thing is your payment history. That's your biggest one. I think most people know that, right? You want to pay on time, and that's actually 35% of your credit score.
Paying on time.
Paying on time, making sure you're not making late payments, you're not missing one because something came up, because all of that gets reported into the credit report. So that's the first one.
So if you have a credit card and you pay your credit card on time every month, you should be building credit. Your credit score should go up, right?
It does. Yes, that's a big factor. However, what most people don't know is that credit utilization is actually 30%. So even if you pay on time, you can still lower your credit score because you've maxed out your credit card, for example, right? So you want to make sure you keep your balances at a reasonable amount. So keep your balances under 30% of your limit, which will then give you a greater chance of increasing your score and having a higher credit score. So, for example, you have a $10,000 credit limit. You want to make sure you use $3,000 or less. Actually, optimal amount is 10%, which would be just $1,000. If it is greater than that, that's going to potentially impact your credit score in a negative way.
Really?
Yeah.
So only use 10% of your credit limit.
That's
So
optimal.
realistically,
Under 30 is good, but under 10 is really where the sweet spot is.
You know that?
realistically, the higher the credit limit, the higher the 10% goes. That's
Right. Yeah.
That's really what you're looking at.
Yeah.
So I had no idea,
I
and I
just like if you paid it off at time, it was like that was all you needed.
I recently got a credit card, and I like I said, I used to use my debit card for everything, household, everything. It was like thousands of dollars a month, groceries, everything, gas. And then, Ewelina and I, and Brad, we know each other outside of this podcast. And she said, that's stupid. You need to get a credit card to get rewards. Like, you need to get rewards, like, really that money and build your credit. And I was like, all right. So, we went over the different credit cards and what I wanted to use my, to my rewards for. And she came up with the credit card I use now. And,
Well, I let you make a decision. Let's just not put out there that I told you what card to use. I asked gave you options, made a recommendation, and you made a decision.
I made a decision.
It's not coerced.
Executive decision.
So I was using the credit card and I was like, it was a low limit credit card and I didn't care. It was under what I normally spend every month on my household stuff. And eventually she was like, you need to lower that balance. Is that your balance this month? I said, yeah, you need to lower that balance. I said, No, I just pay it off. It's on auto pay. I pay it off every month. She goes, you're hurting your credit. I said, no, I'm not. I'm paying it off every month. And then you went into a screen that showed me, and it was like I was in the red on my credit score on that. Even though it wasn't anywhere. I mean, I would say anywhere near. It was like 60% of what the credit card limit was. It was red on the thing, even though I paid it off every month. And then, she said, you need to ask the credit card company to give you a higher balance. And then, I was like, yeah, I'm sorry, higher credit limit. I mean, I give myself a higher balance, but so I did, and I got the balance, bumped up. I didn't stop my spending or alter my spending. I just got my balance bumped up. So now I'm down into the,
Limit.
limit.
Yeah.
Sorry. Yeah, these are all tough words, tricky words.
Yeah, that's crazy. I would have thought just paying the balance off was what would build your credit.
But we talked about the 21 days you get, right? So what gets reported on your credit report is your balance when the statement closes. The bank doesn't know if you paid it off in full until you do it, right? So it's going to impact your score because they worry that you might not be able to pay it off in full, that you might be a credit risk.
Which is why you keep along a credit card, like I said earlier, history.
Yeah, so
History.
length of history. Thank you for leading into my next factor. Yeah, so the third factor is length of credit history. That's actually 15%. And that's really how long have you had an account open? So one thing that I always say, the parents or like young adults that are starting their credit journey and just had a credit card and all of a sudden they're able to open another credit card, keep your first credit card open. It is so important. Even if you're not using it, you found a card with better rewards that better suit your lifestyle right now, or you have a better interest rate because, you're at a point in time where you're maintaining a balance on the credit card, keep your oldest card open. Always use it once every 2-3 months just to maintain it because the length of credit is critical. It's only 15%, but it can make a big difference between having an excellent credit score or a good credit score, which can impact your interest rate.
So here's a question for you. So if you have had a card for, say, 30 years, and back then you're only earning 1% on what you spend. Let's say they have a program now at 3%. Does that automatically move to 3%? Or does it stay with the 30 years where you open it?
It depends on the bank. So there's 2 different ways that banks will handle that. In some cases, they will change your card over to a new product because they've just decided to no longer maintain the product that you opened 30 years ago. And they said, it's an old card. We don't do it anymore. It doesn't make sense in today's environment. They're going to flip you over to a new card. You get to keep the longevity and you're on your merry way. The other thing that they can do is offer you an upgrade, which allows you to choose. You're choosing to convert your card to a new product with new rewards. In some cases, it can have an annual fee that you would have to pay. In some cases, it doesn't. It really depends what they're offering you. And you get to make an educated decision as to what is the next step for me. So in a case where they offer you the upgrade, they're not getting rid of the product, but they think that your spending habits or your recent behavior just doesn't suit the product. So they're giving you an option to move it to a different vehicle.
Okay. That's good. So it's not like negotiating cable companies.
No, that's not how it works with credit cards. Although sometimes, in some cases, if you try and close a card, banks might give you a discounted APR for a period of time in order to entice you to maintain the relationship. It's like a retention play. So that does happen. Moving on to our fourth factor, that's your new credit. So that's 10% of your credit score. So not a lot. We're getting down to the lower amounts, but it's still important. So what typically gets looked at is the last 2 years of opening new accounts. So if you all of a sudden, within a span of 6 months, open, let's be crazy, let's open 5 credit cards, that is a red flag to a lender or a bank, whoever you're, interacting with, because this may be an indicator that you're having some financial trouble and you need credit in order to kind of maintain your lifestyle, and you might not be paying off your cards later. So you don't want to open too many new accounts in too short of a period of time.
Oh, so that probably screwed me back in the early 2000s because it was like every Red Sox game and Patriots game I went to, we got offered a free blanket or a cooler or whatever, I just signed up for it.
That would do it.
I had 4 or 5 cars, and it was like, I get the blanket though.
Do you still have the blanket?
I'm sure they're kicking around somewhere.
Well, hopefully it was worth it.
Probably save your life in the parking lot from saving from freezing to death.
Well, I remember that. They'd have these little tents set up, or booths, whatever,
Yeah.
the games.
Yeah.
I haven't seen those in a while. Actually, I haven't seen them in a long time.
Yeah, so when it comes to opening accounts for students, especially, banks are no longer allowed to offer physical items as a way of incentivizing opening a credit card. We want to make sure that the student or even like an adult individual is making a decision just because the card is right for them rather than because they want a toaster, right? There was a time when it used to be the toaster.
That's right.
Toasters were
Gary probably remembers it.
So people got in trouble. There's a regulation now. We're no longer allowed to do that.
Can't even do the toaster thing to open up a savings account or anything like that.
Can't do it.
Darn it.
That was an enticement for Gary because before the toaster, he had to like toast it on a stick, you know. And then they invented the toaster.
Like I'm in Boy Scout camp.
He had a fire?
Gary still
There
deals
was fire?
in
Oh,
bonds.
he was there for the invention of fire. That's right.
He just cashed his bonds he got 50 years ago. Remember that? That was a gift back in the day.
Yeah.
It was like a $50 savings bond, like U.S. savings bond.
That's right.
And they matured in like 6 years. And now it's like 60 years.
That like much time now.
So we're going to close it on the fifth one. I'm going to bring it back to what you were saying earlier. I know it took us a while to get there, but the last factor is your credit mix. Credit mix, yeah. So that's 10%. And it's why you had trouble with that auto loan that you mentioned earlier is you want to have a variety. So variety is spice of life. You want to have a variety of different lending vehicles that are reported on your credit report. So just having a mortgage doesn't necessarily make you a good candidate for an auto loan to, your example, because you're paying one type of vehicle from lending perspective. You're just paying your mortgage. You have no revolving accounts, which is a credit card, right? The balance revolves. You're able to use it at any point in time. You don't have an auto loan. So you're not showing that you're able to be responsible with variety of different lending mechanisms. You're just doing it with one. So you want to try and have a little bit of everything. One thing that people don't realize is, for example, if you have an auto loan, you've had it for 4 years, you're so excited to pay it off. It's coming due, the 5th year's rolling in. They pay off their auto loan, and all of a sudden their credit score goes down. They're like, what do you mean it went down? I paid off my auto loan. Isn't that a good thing? Actually, no, because you lost one type of lending vehicle from your credit score or from your credit report. So that actually will impact your credit score temporarily in a negative way. So you
was
want
it catch-22 though? Because like I'm not paying the interest on the loan because I paid it off. So it's kind of like a
Something you have to,
you're damned if you do, damned if you don't type scenario.
but something you have to be concerned with if you're going to make another major purchase soon after that,
Yeah.
If you were a young adult, you were going from your teens to, your mid-20s and you're looking to start a family and you looked at your credit report and you saw things you didn't like. Well, what would you think would be the quickest way to improve your credit score, the most bang for your buck, per se, for improving your credit score?
Well, you can't really go back in time and fix your payment history, right? Like that's the 35%. So you can't go back and fix that. You can fix it going forward, but it's going to take a while. But the biggest and easiest fix is your credit utilization, the 30%. That was the second factor that I mentioned. Lower your utilization. Use 30% or less of your available credit, and that's going to make an impact very quickly. Just over 1 to 3 months, you'll see a drastic improvement in your credit score. That's your first thing to go after.
Yeah, I remember when I deployed several times, and one time I deployed and I left instructions to have my credit cards paid because I was overseas, and they didn't get paid.
No kidding.
And I came back.
There was no auto pay back then.
No, I came back and I
Somebody dropped the ball on that one.
I was like, I had late fees and I had all these dings on my credit report. So I had to write the credit bureau and send them copies of my orders. But even some of the dings that were on there that weren't from the deployment, you can write them and you can ask them to remove them. And then sometimes they'll just remove them. The VA won't, though. The VA won't. The VA, one time the VA overpaid me. And yeah, so the VA, no, the VA overpaid me, and the VA sends you now they just call you and send you emails, but back, 15 years ago, they send you 900 letters, like a month. So I stopped open. I didn't open them. You know what I mean? I'm like, oh, it's another stupid thing about this, about that, about life insurance or, this or whatever. And then finally I opened one because I was like the thicker one. I'm like, what is this? I opened it and it was like a collection thing. I'm like, collecting from what? And they were like, we mistakenly overpaid you and you didn't pay us.
I want you to run it back.
You didn't pay us back, and they dinged my credit.
No way.
Yeah. So I wrote and I said, hey, this was not my fault. The VA overpaid me and I just didn't see the letter. And the VA refused to pull it off of my credit report. I didn't need the credit for anything. I just didn't like having that on my credit report.
Oh, yeah, absolutely. You
So-
don't want that shit on it.
Well, how long does that last? Do you know offhand, or you might not know about?
How long it lasts on your credit report?
There's if somebody reports you to a credit report, mispayment or something like that.
So, credit report has all the information from your entire credit history of your entire life, and there's ways to check it. But if I'm not mistaken, and I'm not 100% on this one, I think that counts against you for 7 years.
7 years. Holy mackerel.
Pretty sure. I think bankruptcies stay on there for 7 years. Bankruptcies, any other report where someone thinks they're doing collections after you, I think it's 7 years, but I might be wrong.
Good. So before we move away from credit cards completely, run us through a way. So and I know everybody's going to make fun of me. Should I say my grandchildren are 10 years old, 15? I know you guys if I say that. So I'm going to cut you off at the pass. Meanwhile, back at the ranch, run me through a scenario where if you had a 15-year-old child and you wanted them to get a credit card and to start developing a credit rating, how would you do that? I mean, back in the day, I used to tell people get a Sears card, start there, and then move into like a MasterCard later, right?
The 15-year-old can't get a credit card.
So, correct. 15-year-old can't get a credit card. But what most parents don't know is that you can actually start building your kids' credit before they turn 18, which is the legal age to get a credit card on your own.
18?
18. That's when you can get a credit card. But you can start building their credit report, not credit score, credit report, by adding them as an authorized user to your credit card that you're hopefully managing responsibly, right? You don't want to put them as an authorized user on a card that you're not maintaining responsibly, but you add them in, and what that allows them to do is receive, actually, I should say, it allows them to receive your good credit history
To start off.
as something that gets reported on their credit report, which will help them get their first credit card when they go to apply when the time comes.
Is their name going to be on that card where they're a co-sponsor or whatever you just said?
Yeah, so they're not a co-signer. So let me explain the difference, I think. Excuse me.
Yep.
That's what most people don't understand. So co-owner or as a co-borrower, you're added as someone who's responsible for repaying the card with this other individual, right? So
Okay.
both of you are equally responsible for it.
Right.
When you add someone as an authorized user, what it does, it adds them in as someone who has access to the credit limit, access to a physical card. So the bank will print a physical card with that individual's name on it that they can take and legally use for purchases or any other thing that they want to do, but they're not responsible for paying it off. But because they have a card, it actually ends up being reported to the 3 credit bureaus. So there's 3 credit bureaus, Equifax, Experian, and TransUnion, and it gets reported to them. So when your child goes, or someone else's child goes to apply for a credit card or a loan in the future, the lender will be able to see that there is some history. So their parent or someone else, maybe grandparent in your scenario, was kind enough to use their own good financial habits to start building their credit report.
Now, you said someone else's child. Can you do that for a niece or a nephew or
Absolutely.
like
No
good
kidding.
good friend, godchild?
You can put anyone you want as an authorized user as long as you have their personal information, including their social security.
Yes, they're social.
Yeah, social, I think address, and their legal name, if I'm not mistaken. Those are the 3 that you
Okay.
need to have. Definitely social and name. Address, I'm not sure.
That's crazy. I didn't know you.
So I remember, I don't want to bag anybody here, but we were at Brad's house the other day, and Brad was talking about getting his son a credit card, and he says he wants a credit card. He wants a credit card. I can't give him a credit card. He's not 18 yet, and he doesn't have a checking account. I told him you need to have a checking account to be able to pay a credit card. You can't pay a credit card without a checking account. And Evelina looks over at me and goes, "Thank God we're doing this episode because literally everything he said is wrong." I was like, "Oh, see."
We should have let that one out. Private conversation.
I had no idea.
That sounded good at the time.
Oh, yeah, no doubt. Yeah, exactly.
Yeah, let's clear that one up. You can add him as an authorized user on your credit card.
I would just hide his
If you
credit
choose,
card.
you just don't have to get us it's stuff of plastic.
But
As one,
I
you
remember
can also get him a checking account if you wanted to.
So he's got a checking account.
You looked at him. You looked at him, and you were like, "You're not gonna write a check every month, and what, you gonna go buy stamps?" she's like, "That's not how it works."
Yeah, I asked, do you even know what a check is?
Yeah.
Oh, I guarantee you can't know what a check is.
She's like, yeah, checks are going away.
Not at this stage.
Cash is going away.
But that was one of the things. That was one of the reasons I didn't get a credit card, because I didn't want to have to remember that stuff. And then, but you can just set it up for auto pay. No, don't even worry about it. You know.
Old school, yeah, and I still balance my checkbook. I still write checks.
You actually do the balancing thing where you take the
absolutely,
balance
yeah.
and add this and subtract that and all that.
Yep.
Way too much time on your
Every
hands.
check I write.
Imagine the time you could give back in your life if you actually let technology do that for you.
Yeah, auto pay's too easy. I like looking at the bill first. It's like, yeah, I gotta see what's on it. I used to be like, auto pay is just like, take the statement and put it aside.
Listen,
The least I
But
can do
make
is
sure
look
you
at
pay on
it.
time.
Oh, yeah, I definitely pay on time.
Okay.
But it's like, as soon as that statement comes in, I pay it.
Pay them to set it up, right, or something on your computer. You set up the payment on your computer to, like, if it's a credit card and it's due on the 15th of the month, you set it up on your computer to do
As I
that.
get it in the mail, basically, I pay it.
But you pay it on the computer.
I got two of them
What if
today.
it gets lost in the mail?
No, I just write a check.
you write a physical check?
I write a physical check.
Yeah, you might be older than Gary.
I need to get up and do the statement right now.
My Lord.
Hey, the federal government's cutting checks out this year, right, for your IRS returns.
I thought they already did, but I don't know.
This year is the first year
Is
that it's going to be like you can under certain circumstances, but checks are going away, and I think cash is going away. I think they're going to want us doing everything on credit, is my opinion, someday. So no more cash.
So I haven't gotten a check as from the IRS in a long time. Everything has been digital for a
It goes all down.
No, they owe me. They owe me. They owe me. But everything goes digital. But with cash, I don't know. I think there's always going to be applications for cash, and I think there's some people that don't want it to go away. There's definitely.
I don't want it to go away, but I think the federal government wants it to go away. They know where everybody's spending on every freaking penny.
Jesus.
Like a digital, yeah, exactly.
That's what my guess is.
Digital
But
footprint.
I'll be long gone when they take up. But no more checks gonna get mailed out to you guys when you do your IRS stuff this year.
I'm not worried.
Anyway,
No impact.
So,
We've
how do you check your report free? Do those Equifax and that, they do that for another?
Yeah, so that's a good question. According to TransUnion, 1/3 of Americans have never checked their credit report. So that's like having a checking account. We just talked about a checking account. It's like having a checking account, swiping, using your debit card, pulling money out, and just hoping that everything's fine and never checking it. So it's really important to check your credit report. What most people don't know is that, well, they do know that it impacts their interest rate, right? They know that it impacts their interest rate.
Yep.
They know that they might not get approved for a loan or a credit card. What they don't know is that in some cases, you might not get approved for a rental on your first apartment, or you might not even get a job. Some companies actually
Job?
Job. I did say job.
job work.
Yeah,
Seems a little
seriously.
criminal.
Some institutions look at your credit report to check if you're a viable candidate for employment. Because if you're not responsible with your credit, how are you going to be a responsible employee? Number one. Number two, it might be a reason for an employee to want to steal.
Steal.
No, in the military, that's one of the biggest reasons people get denied top secrets security clearances is because they
Score.
credit score or being in debt things like that, because that's one of those things
Propensity
somebody
to not be honest or something.
well, it's not that, but that's something somebody could leverage against you. You know what I mean? Being in debt, not having, and that's one way to see that, to see if you
Shit, I'd like to see all of our politicians' credit scores.
But there used to be
a requirement to be able to have fraud. It's like the guy in Warwick, he'd be really good score.
Yeah, no doubt.
You might not know the answer because this doesn't have much to do with juvenile.
I don't know a lot of answers.
No. I'm just oh boy,
Prefacing it to be nice.
yes, to save myself. Well, Ewelina, Brad, I'm sure might know, but Gary, you might not know that Ewelina is a 2nd-degree black belt in Krav Maga.
I did not know that,
Yeah.
nor do I know what Krav Maga is.
So that's why I tread lightly. It's the Israeli martial art of
Oh, is it?
of mostly like grabbing and kicking people in the balls.
Oh my gracious.
Every video I've ever seen online is.
That's Romo video for you to learn how to do
Well,
trails.
let's face it, if you want to hurt a man,
And
that's
eye gouging.
The first target is always the groin. I gotta say, it's the easiest, especially if women are going to get assulted by a man.
Yeah.
Hello,
Grab and
easy.
twist.
I get
It's
it.
within
Right,
reach of
right.
every knee. So, why not?
Yeah.
Eye gouging is also a great option.
But that's why I tread lightly. That's why.
I get it.
But
Sitting within my reach.
There you go.
But the question I was going to ask is, there used to be it might be a misconception, but it used to be that, like, when you would go to auto dealerships, people would tell you, don't go to too many auto dealerships, and if you do go there, don't let them run your credit, because it will. The urban legend was that every time you went to an auto dealership, it would lower your credit 2 to 4 points every time they ran it. Is that?
Yeah, right.
Yeah, that's what I used to hear. Yeah.
So, running your credit for a hard inquiry. So, let's talk about soft inquiry versus hard inquiry before I answer your question. So, soft inquiry is like you checking your own credit score and seeing what your score is, or checking your credit report. Hard inquiry is looking to apply for a loan. That's a hard inquiry. So what you describe as a hard inquiry,
Yeah.
those do in fact lower your score just a little bit, and it's for a short period of time. And they do go into that factor that we talked about, which is new accounts that you open. But running it multiple times will not impact your score every single time, as long as you open that account at the end of it, right? So you can go to 5 different dealerships, they run your score, but at the end of the day, it's going to count as one inquiry.
wow.
If you buy a car,
Because
they
you
know
end
you're
up
negotiating.
getting a car. You were trying to figure out what's my best option, who's going to give me the best rate. So running it multiple times is really not that bad for you,
It's crazy.
as long as you get the loan. If you don't get the loan, then, all of them are going to be out there. But if your intent is truly to purchase a vehicle, that's perfectly okay. And again, it's only a 10% factor. So you got to remember it.
Yeah,
that
yeah.
If your score, it's, 840
Yeah, right.
and max is 850, the 10% is not going to reduce it by that much. So you always got to think about.
Roughly 84 points.
Well, that's 10%.
How about that for math? How about that?
Good job.
Aha! Might not have got the interest rate question and had the amount of time it took, but I got the 10% of 840.
Nice work. Excellent. Excellent math. He's probably hiding some Excel spreadsheet back there. He's super at math.
I guess AI
He's
operator.
got a loan calculator over there.
You didn't do so well on that crack card question.
No, I didn't. But I'm redeemed. I'm redeemed. I'm sorry. I didn't mean to get you off track.
No, that was good. I think we can segue to, one last thing that we haven't talked about is, one, like, what are your credit score bands? Like, what's a good credit score, right? What's excellent versus good? What's poor? So 800 to 850, that's your excellent range. Like, you're getting anything and everything that you want because you're doing great. 740 to 799, that's your very good. 670 to 739 is good. And anything below that is fair and poor, right? So 580 to 669 is your fair, and 300, which is the lowest score you will have, goes all the way to 300. Doesn't go to 0. Misconception. It's 3 to 850. 300 up to 579 is poor. So stay above that 740, and you're doing great. I think the last thing is, do you guys know where to check your credit scores? Have you guys looked into doing that ever?
Well, those 3 companies that you talked about earlier, right? Isn't there a way to get a hold of them on the computer to get your credit score checked?
That's your credit report, and that's actually a good one. You can check your credit report from each one of the...
Isn't there a number at the end of it? If you ask for your credit report from TransUnion, when they send you something, right? Then doesn't it say at the end that this is what it doesn't even have it there?
Not.
So what is it saying on that report that I would care about?
So that's the difference. That's the difference between a credit report versus credit score. Report feeds the score. Right. We talked about that earlier.
Each of the 3 would assign a number to me.
No, and I'll explain that a little bit.
Okay.
But so credit report really is where all your history goes into, right? So your name.
Oh, like if you paid on time or who you're borrowing money from, and if you were
exactly.
credit cards and all that.
Yeah, so all the basics go into it, which is your name. Even if they misspell your name on an application, it's going to show up on there as an alias that you've used previously because someone misspelled your name. So always check your name. Your address, like your address history from every address you've ever lived under is going to show up under there. And what you're going to see is every single loan account you've ever had in your life. Like, imagine that first credit card that you've ever applied for.
Well, Gary, you did have the first credit card ever.
I did.
So it's gonna be really long.
So like when I log into my credit wise. Okay.
Yeah.
So you're logging into my credit card app and it gives me the score.
So you have CreditWise is capital.
Is it below 300?
Discover puts him in there too.
Exactly.
We'll get to that. Hold on. We got to finish on the credit report. We're getting ahead of everyone.
All right.
So that your credit report then has every account you've ever had and all the history of your payments, whether they were on time.
Real.
It shows you what the time that you pull it. It's going to give you your balance on each one of those accounts. If there is,
You don't make enough paper for mine.
it's going to be long.
Speaking of paper, I still get payment statements.
Tell me, Lord.
That's what I was saying earlier. You gotta check it. And good news is you're allowed to check it for free once a year.
From all 3 or from one? One of
From
the
all
3.
3. And I want to make sure I give you guys the right websites. I'm going to double check this. So it's annualcreditreport.com.
That's it.
There are sites that are going to tell you it's free credit report. Don't go on those. They will charge you.
Annualcreditreport.com.
Annualcreditreport.com. You can pull all 3 of them.
From one place. From
one place. You're entitled to do it once per year, and I highly recommend it.
Now, will they send you a paper thing, or do they send it to you digital? I mean, on your computer, like attached to an email or something?
So
Yours would be like the size of a Bible.
That's why they were says it that
No.
way. They want it to be on digital, right? Because
they'll walk you through a series of verification steps. So they're going to verify that it's actually you. They don't want to give your credit report to someone else.
right.
And then they will display it digitally. You can then
They will.
download it as a PDF and save it on your computer.
I got it.
So, digital.
Take up 2 terabytes.
So we're not buying stamps like Brad, not sending checks anywhere. Everything is digital these days. All right, so that's your credit report. So Brad, let's go to your how to check your credit score. So it sounds like you checked it with Capital One,
Correct.
right?
Let's see. I was trying to see if Merrick's is the same thing, but let's see what you do.
They should. I'll tell you right now.
Turn your phone toward the camera so everyone can.
So I'll start with what you're doing. So Brad, you're checking with a provider that you have a credit card with, right? I'm assuming Cap One, American Express from what you mentioned.
Yep.
Most major financial institutions like Wells Fargo, Bank of America, they all offer some way for you to check your credit score. It's typically without a charge for you.
Oh, really?
It's actually always without a charge. Other things might cost. But you can go and check it every single month. They will send you notifications usually to let you know that the score was updated, went up this much, it went down that much. They'll provide recommendations on how to improve your score. So in Jason's case, they let him know that he shouldn't use as much of his credit as he has been or
They did.
increase his credit limit.
You did. Hey, they didn't.
Right. So thank goodness he has someone who's been helping with that kind of thing. Yikes.
But even if you don't have a credit card with one of those institutions, some of them allow access to non-customers. And I think that's an important one to know. So American Express, My Credit Guide, they do have one. We can look at it later if you want me to help you find it. But they do offer one, and it's actually available to non-customers. So if you don't have an account, you can still sign up with your email. They will ask all your personal information. You can check your credit score with them.
I would think the two would be similar, though, no?
It's going to be the same.
Yeah.
But it's just an option for someone who doesn't have a credit card. So American Express is one of them. Chase Credit Journey is available to non-customers of theirs. Capital One CreditWise is the third one. So those are the three major ones that open that platform to someone who is a prospect or a non-customer of theirs. And the benefit to them is that they get your information and they can potentially see if you want to apply for other products with them. They get your email address, all that fun stuff. But you can check it for free, which is nice.
Tell us how, bottom line, should a parent be able to help their 18-year-old get credit?
So we talked about the authorized user, which seemed like an aha moment for most. So that's one, right? That's before 18. But once your child reaches 18, you want to start building the credit right away. So 18 is the mark of you got to get going. You have to start now, because before you know it, you want to buy a house, you want to buy a car, or whatever else you want to do with your life. You need to have good credit. So you can start them with a student credit card. If they're 18 and they're a student, it's a great starting point. There's some awesome resources online. Nerd Wallet is a great one.
Is it really?
Yeah, it really is.
I mean, the name just kind of turned me off. That the first place. I never looked at that. But it's a good. But
Like green light?
they tell you a lot of stuff there, don't they?
They do, and they have so many valuable things and analysis on various credit cards that tell you which one might be the best for you. It's a great place to start, but they do have a site, and we can link it in the show notes, hopefully, where you can look at a list of credit cards that are available to students. And they
Oh, really?
Yeah,
It's like a place you can go where. Okay.
Yeah, it shows you a listing of all the various things that all the different banks offer on their student-specific credit card and what are the rewards if they're looking for rewards. They usually start you off with a very low credit limit, and they look at,
Like $500.
in some cases, yeah.
No, I'm serious.
Yeah.
If an 18-year-old, you don't want them to do more than 500 because they get in the hot water like my daughter did.
Yeah.
Right.
Because they don't get the concept.
Because once all of a sudden they got this
it's
free
free
money.
money.
Hey, let's go out for brunch, everybody. It's like, no way.
If they have no credit report history and they have no credit score, the bank's going to be really, really conservative. They'll be like, okay, we'll throw you, $500 here.
Okay.
Or I think when I started with my first card, it was like $300. It's just like, see if you can handle that. And if they handle it responsibly, right, pay it on time. You make sure you use less than 30% of your credit limit, as we talked about, per year. Make sure that you're just being very responsible with it. Over time, they'll increase your credit limit and they'll just keep growing it for you. And then you can apply for another one.
Do you have to ask them to move up your credit limit, or will they automatically do it if you're doing all the other goody things that we just talked about?
Double yes.
Oh, double yes.
Correct.
I was
It's
gonna say,
a double yes. Yes,
So-
on both accounts.
Yeah, I get inquiries all the time about whether or not I want to increase mine.
They ask
And-
you first?
Yeah, and I would say no because my credit limit was right where
You wanted
it was below what I needed to pay my bills. And that's when she said, "You need to increase your credit limit." I said, "Nah, I'm fine. It's below." And she goes, "No, it's hurting your credit." I said,
Big
"What?"
spread.
Yeah, I said, "What are you talking about?"
Let's.
That's where that conversation,
Yeah.
that came from.
Yeah.
So they asked me, I went in, I put my information back in, they increased my credit limit. So, I mean, that's my
But
experience.
at 18, it's kind of presumptuous all of a sudden to say, I got 500.
Well,
and then you wait 3 months and you go back, hey, can you raise that to
It's
$1,000?
it's on an app now. It's on an app.
What do you
They
mean
hit
it's
you.
on
But they don't.
The credit card's on an app. They hit you on the app. They tell you, they send you emails.
How does that help
yeah.
you get your credit score up? I mean, not credit score. How do you get your limit raised from 500 to 1,000 on an
Because
app?
they ask you. They ask you and you fill it on the app. There.
To answer Brad's question, because I think
Oh,
your
Brad had
answer,
a-
you
Brad had a
answering my
question?
question for me. To answer Brad's question, yes, they're both ways. Actually, it was Gary's question, and Brad kind of jumped in as both. So they can automatically raise it for you if you think you're credit worthy, and that happens once you've had your credit history for longer, right? But if you're a teenager and you've had your credit card for 3 months, they're not going to go and increase your credit score. Let's be real. It's not going to happen. But you can go in, to your point about going into an app, you can go in, and in most tech-forward financial institutions, you can go in and find a place where you can request to increase your credit limit.
Okay.
And you say, hey, I need more because I spend more. And they'll ask you a bunch of questions. And one of the big ones is, how much are you earning?
Okay.
And that's a big factor into whether or not they think they can extend your credit to you, not just your credit score.
Will they take your word on how much you say your earning is, or do you have to
They
prove to them?
do take your word on it.
No kidding.
They do, but they check it against.
I mean,
the
but they're not going to
thing.
make a huge differential, but still,
Correct.
they're asking.
Correct. But your credit score goes into it as a big factor. And when they reevaluate you for increase in your credit limit, it's actually a soft credit check. So we're coming right back around to what we talked about earlier. It's a soft credit check. They're just pulling your credit report, but it doesn't count as an inquiry against you. They're just double checking if your credit report is actually in good standing right now, even though they're the ones usually reporting all this stuff to them, because you might have just one credit card. They're checking, let's just make sure everything's okay. If they decide to, they'll increase your credit limit.
Okay.
So this is interesting.
Thank you, Brad.
So,
Yeah, this is it.
question for you as this school committee member.
Cheers,
So,
brother.
all the stuff we learned tonight.
Yes.
I hear you 40s, 50s, and ancient over here. And we've all learned something tonight.
30s, 30s, 40s, 50s, and 80s.
Oh, no, I wouldn't say
She's in a different league too.
No, you already know it all.
No, you didn't learn
I'm
anything.
40s.
You stay.
I'm 40, he's 50s, and he's ancient.
I thought it was insulting.
The stuff that the people that learn stuff tonight, the three of us that
Yeah,
learn
exactly.
stuff tonight. The
So,
only thing you learn is how unruly we are.
because
Can't keep them
people
on topic.
have to use this on a regular daily basis, doesn't it sound like a good school curriculum
Oh,
type add-on?
yikes!
Like,
yikes.
let's instead of teaching that calculus 3 class that half the kids aren't going to use, or trigonometry bullshit.
Well, no,
Why don't we-
they're not teaching calculus 3 to every kid.
No, they're not. They're not. But I mean, you get my point.
No, yeah.
So, like, why don't we teach kids like everyday type of stuff
This
they're
is
going to use every day? Like,
Wicked important.
even besides this, it's like
So they're
how to
they're
open a bank account, how to write a check, how to balance.
Are you
book.
talking to the school board member? when
no,
you're
it's
asking
committee.
this
It's a
question?
committee, Gary. Mayor. So as a school committee member and as a relatively experienced person who's been through school.
Woo-woo.
How they going to say relatively
He
good
repeated a
looking?
couple of grades, I guess.
Elder guy.
Well, that's always the rule. This has been the complaint of most parents, like, for eons, is that this that this is not taught in school.
Why is it not?
Like I have a son who's a junior in school. He has a horror film class. He has a guitar class.
Oh, wow.
All great stuff to give him experience in, but not stuff that experience as in, I like this, I want to pursue this. But this is something he is going to have to
Deal with.
tackle.
Yes.
This is a 100% thing that
Yeah,
I
100%.
I believe 100% that this should be taught in schools.
So who
Well,
dictates that? I'm assuming that's a state.
The state dictates a lot of the
State does the
curriculum, but there could be an elective. I mean, we could probably do an elective in a local school committee do an elective. But as far as somebody who researches this stuff, at what age do you think that should be interjected into the curriculum?
I think early teens is the appropriate time to start introducing kids to this. I mean, you can do it sooner at a much lower level. For example, checking accounts, how to use a checking account, what does it do? Introducing them to debit cards. There are some institutions out there, fintechs and actual regular financial institutions that have products for kids as early as you choose to have it at, where the parent manages the money and the kid just gets the debit card. So the sooner the better. But if you want to start talking about actual credit, I think early teens is the time to start talking about it and educating and instilling some really, really good habits, because it doesn't get taught overnight.
So why are the schools doing that? They should be doing that 100%, in my opinion.
It's never been done. That's the reason nobody's doing. And the state,
I mean, hold on. So I went to Woonsocket High School, not the best school system. Oh, but this.
Don't say that. You'll get protesting. Do not say that. You will get protested.
I will regret my words later, but when I moved here at 16, I already knew everything that I needed to know that I learned in high school for the subsequent 3 years. Yeah, in Poland, different country.
So you learn this kind of stuff in Poland?
No, not financial stuff. So this stuff I learned here. I had to kind of learn it on my own and figure it out. For the most part, we did have one course at the time, early 2000s, where we had someone similar to my experience who was in banking who came in and taught us a few things about, I don't think he taught us anything about credit, but definitely there was a baseline of having a checking account and really understanding how to balance a checkbook. So I had that experience. I can't speak to Cumberland school system and why they don't do that, but there's ways to partner with financial institutions, whether a small or a large, to come in and have someone educate you.
And that's just one aspect of it. Like,
Do they use that?
teach kids what an interest rate is. Teach kids what a 401k is.
Is that
How it works.
But is that just the public schools or is that private schools? You know, I mean, so
Private school, same thing.
they don't teach it.
No, they don't.
That's crazy.
That's insane. It's insane to me. This is shit you're gonna do every day.
That's
You
why
gotta
it
deal
falls
with
on the
every
parents.
day. Yeah, it falls on the parents.
But the problem is a lot of the parents don't have great credit. They don't know, and they don't know this stuff.
You can't rely on every parent.
Listen,
Right, yeah.
like if you'd have told me to teach my kid, I'd been like, don't get credit cards, and then he'd go to then he would have gone to get a car loan, and he'd been like, I got shitty credit.
And it's
You know?
back to what I said. All three of us learned something tonight.
They would have been
No.
like the car guy would have pulled up his credit and been like, he doesn't even list you as a citizen of the country. Well, my dad said never use a credit card ever. I'm like, well, that's the problem, you know.
Well, so my parents had no idea how it worked.
Yeah.
I had to go and figure it out. I went out of my way, figured it out.
and you're a professional. You did it for a living now. Think about that part. You was something right. Here, folks.
I did something.
Or you did something right. I get it. They pointed you in the right direction.
But if you get a good base, at least you have an idea. So,
I think
I don't think a lot of these kids these days have any clue.
I think if you can be the parent that takes charge and starts that education, gives your kids a huge leg up in the future. And, if you can get the school system to help support you in that journey, that is huge. So I think it's a combination of both.
That should be a class.
Yeah.
It should be a
I don't
requirement.
think it's an entire semester worth.
No. So when I was in high school,
You can tell it, no, just daily life type stuff.
when I was in high school way back in Aurora, I had a class that was Rhode Island Civics. They taught me Rhode Island Civics, which I thought was a great class. Like the Rhode Island Civics. Yeah, like how the government works.
Yeah, they should
And the
know that.
Browns and
Yeah, but I just had
slavery
that was a great class.
Yeah, I can see that being a great
Like
class.
like way less impactful on my life than financial literacy would have been. You know what I mean? Like, but it's still a great class.
So fine, couple that.
It was good.
Couple that with how to make a monthly budget. Like
Yeah.
what expenses you're going to be looking at when you
How
get
to be
older.
responsible with your money and
Is there rent versus mortgage? Like what? There's a ton of avenues you can go down with that.
I think just having even a guest speaker once, I don't know, a semester that comes in and teaches that stuff would be really, really important.
So I'm kind of a little bit like, I don't want to say embarrassed, but a little bit disappointed in myself that I have a 19-year-old, in 2 months will be 20-year-old,
wow.
and I haven't put him on my credit card as an authorized user because it's auto. Now I know I have to lower my percentage, but it's an auto.
Or just raise your limit.
Well,
Yeah, raise
at
the
this
limit.
point, you can help him start a credit card. So there's
Yeah.
some great resources if you're looking for a specific credit card for him to figure out like how to start his credit. If NerdWallet is a great
No,
resource, you can go and look at one of their articles that outlines all the various student credit cards that are out there. He can take a look, see which one fits his needs,
Yeah.
submit an application, see if he gets approved, and get started. That's the first way to go.
The problem is the one that will fit his needs is the one that like gives you more points on Grubhub. You know what I mean? It's like unbelievable. Like,
Yeah, but if you're not a co-borrower, what does that matter to you? His Reddit, right?
yeah, right.
But you gotta learn how to manage.
Hey, there's leftovers in the fridge. Nah, I want DoorDash.
Oh, it's like, yeah, exactly. like,
It's like, wait. Cost to eat the freaking leftovers.
how much did you pay for that pizza? Like $52? Like what? The pizza.
Who cares, right? Grubhub delivers
I'm like-
free over $50
I'm like,
now.
You're 19.
No,
you have a car. You know, you have cash.
Go drive to the damn pizza joint. Get your own delivery guy.
Anyway. Sorry.
Brad
took us off track.
So we need to wrap up, kids. What are we doing now? Where we want it? So are you guys happy with? That was a pretty good show for crying out loud, you know?
That was good.
So did we cover what we thought we should cover, Ewelina?
I think we covered
We hit everything.
just about everything. I mean, there's other options for kids who maybe don't get approved for a student credit card. Maybe they're not students, so there's secured credit card options out there.
Secured credit cards, yeah.
Do you guys know what that is?
No.
No.
Well, I mean, I think it's where they.
Well, it's backed by your by the money in your bank account. I'm assuming.
Sort of. So secured credit card is essentially apply for a credit card, but you have to put up the money that you're going to borrow against.
Oh, okay.
So
I miss. It's like a letter of credit almost.
yeah, well, no, because a line of credit is secured against.
So you get to prove yourself on your own money, kind of. But if you prove yourself correctly, then you
nailed it. You nailed it. You give the bank $500, and the bank holds the $500. You get to borrow against the $500. That's your credit limit, and you have to prove over time that you can be credit worthy.
Yep.
Because you gave the bank the $500. So if something goes wrong, the bank lost nothing, but you at the same time are trying to build credit. So that's one. There's loans out there. Some like smaller banks will offer a personal loan that you can borrow and then repay over time. That starts building your credit. It usually has a higher interest rate. What's a great way to start for those who maybe don't get approved for a credit card or can't do a secured card. And then the last option, and we talked about that a little earlier, is just being a co-borrower on a vehicle. So for myself, not vehicle like as in a car, but just any kind of lending vehicle. When I started my credit journey, it really was, I opened my own credit card first, but then I wanted to buy a car and I couldn't get approved for a car loan because I wasn't making enough money and I didn't have enough credit history. I had my dad co-sign on the loan. And I was the one paying the loan all along. My dad was just there as a security to prove that I could pay for it. The downside of that is the co-borrower is responsible if something goes wrong. Right? So whoever you're co-signing for, just be ready. If they can't pay it, you're on the hook for it. It's going to impact your credit score and you're going to have to pay off that loan. And even if the money didn't go to you. But that's kind of like the last opportunity to give your kid kind of a leg up on getting some credit report history.
Very cool.
Jason, you have some words to wrap up here a little bit with us?
So, as always, you can find us on Facebook, Cumberland Unfiltered, Instagram at Cumberland Unfiltered Podcasts. We're on Spotify, Cumberland Unfiltered, and YouTube. Is it YouTube Cumberland Unfiltered Podcast?
Yes.
So you might have to resubscribe. So like, share, subscribe. You may have to resubscribe to Cumberland Unfiltered Podcast on YouTube. Resubscribe to YouTube, please.
We also want to give plug to Clear Signal Productions. Thank you for tonight.
So
Well, welcome to the team.
well, let's
Looking forward to
not thank them yet until there's a filter on me. If I get a nice filter.
We're going to have makeup for you next time.
Anybody who's looking for a producer, is it Clear Productions, signalproductions.com?
Here we
Is that
go.
what it is? Yeah, clearsignalproductions.com.
Yeah.
Oh, yeah, we get the card right there. Yes. That was a good.
Stole my thunder. I was gonna
fun
plug him. I was gonna plug the new production.
You were gonna do it too already? Look at you
I
guys.
knew
It was like
I
the
knew what your name
professionals,
was.
the
I
real
wrote it
pros
down.
over here. For sure.
And thank you, Ewelina Leja, Princess Leia, for your.
Hey.
Thank you for having me. Thanks
Yeah,
for
very
listening.
much. It was great.
Children, pay attention.
Maybe parents pay attention.
Yeah,
Help yourself.
parents, pay attention on behalf of your children. Does that make it a wrap, kids? It's a wrap. All right, we're wrapping it up. Thank you very much.